Welcome back to Investing Talk Podcast. Today, we're focusing on BEKE Holdings, a company many of you are definitely watching, particularly with their upcoming earnings report just around the corner. Our mission really is to sift through the sources you've shared with us, pull out the most important insights, and help you understand what's truly going on with this major player in China's real estate market. Before we really get into it, if you find these explorations valuable, please think about subscribing, liking, and commenting. It honestly helps us a lot to bring more of these discussions to you. And hey, if you'd like to support us a bit further, you can always buy us a coffee. Also, and this is important, if there's a specific company you'd like us to look into next time, just leave a comment below and let us know. We do read those.
Absolutely. And, when it comes to BEKE Holdings, there's quite a bit to consider, especially with their Q2 2025 earnings report scheduled for August 11th. That's before the market opens. There's definitely a lot to unpack here, stuff that goes beyond just the headline numbers.
Okay, let's unpack this then. We're talking about BEKE Holdings, a significant player in the Chinese real estate and housing sector. What are analysts currently anticipating for their Q2 report?
Yeah, what's kind of striking about these estimates isn't just the numbers themselves, but how tightly grouped they are, especially, for a company in such a dynamic sector. For revenue, the consensus estimate is floating around $26.17 billion. Then when it comes to earnings per share, or EPS, that's the profit per share, right? There's a pretty narrow range in the analyst estimates, running from about $0.22 to $0.29. This tight grouping, it kind of suggests analysts aren't really seeing any hidden catalysts or major red flags the market might be missing.
Interesting. So given that tight range, what does this imply for that unofficial whisper number that investors often try to listen for?
That's a great question. So the whisper number, it's usually this unconfirmed, maybe higher or lower estimate floating around among traders, right? It's what people really think might happen beyond the official consensus. But in BEKE's case, because that official consensus for EPS is already given as a range, that $0.22 to $0.29 split window, well, that effectively becomes the unofficial whisper number. It kind of sets the bar for what would really surprise the market. Anything outside that narrow band would likely cause a stir. As for BEKE's own guidance, specific forward guidance for this quarter wasn't really widely cited in the sources. However, their last reported quarter, Q1 2025, that had an EPS of $0.16, which actually met the consensus right on the nose at that time.
Okay, so to understand what might happen next, we probably need to look back a bit. Has BEKE been a company that consistently surprises, or do they, tend to stick closer to expectations? Their history against estimates must tell a story.
It certainly does. And it's a bit mixed, actually, if we look at their past performance. In the quarter just before this one, Q1 2025, they met estimates exactly, EPS of $0.16 against a consensus of $0.16. So, yeah, no big surprise there.
Right.
However, if you rewind to Q4 2024, they reported an impressive EPS of $0.31 against a $1.22 consensus. That's a significant 40.91% positive surprise.
Wow, over 40%.
Yeah. Quite a beat. Now, our sources don't detail every single quarter, but the general feeling is that BEKE's EPS and revenue have tended to either match or maybe slightly beat estimates. So not always dramatic, but they do have a history of exceeding expectations sometimes.
And what about the stock's immediate reaction after these reports came out? Was there a pattern of big swings, or did things tend to be more calm?
Well, for Q1 2025, the stock showed pretty muted movement right after. It closed slightly negative, down just 0.17% the day after reporting. So not the big drama you sometimes see. The data for other quarters isn't readily available in the sources you shared, so it's hard to infer really strong, consistent patterns there. As for key metric trends, year-over-year EPS growth is expected to be relatively flat to perhaps slightly up. There was a recent change noted, around 0% to maybe negative 6.45%. Unfortunately, we don't really have enough data from these specific sources on things like operating margin or user growth trends to draw firm conclusions there.
Right. Every company, especially one like BEKE, operates within a much bigger context. What significant news or sector trends might have impacted BEKE during this past quarter, particularly thinking about the macroeconomic side?
Yeah, and this brings us to a really crucial point about market sentiment and the broader landscape. One notable piece of news just leading up to earnings was UBS upgrading BEKE. They upgraded it to a buy and raised their price target in the week right before the report.
Oh, okay, UBS upgrade. That's usually significant.
It is. It's a vote of confidence from a major bank.
Yeah.
Beyond that, though, there weren't really any other major product launches or, company-specific operational things highlighted in the period.
But as you rightly pointed out earlier, you just can't talk about BEKE without discussing China's real estate market.
Yeah.
And this is where things get really complex, isn't it?
Yeah.
What are those bigger, more significant challenges facing the whole sector right now?
You're absolutely right. BEKE is directly exposed to China's real estate and housing sector. And that sector continues to face some pretty profound macro headwinds. We're talking ongoing regulatory pressure, tighter lending development rules. It's made everyone cautious. Then there are significant consumer sentiment concerns. After years of crazy growth and, well, some over-leveraged developers, people's confidence in property as a safe bet has been shaken. That leads to hesitancy in buying, right? And it directly hits property transaction volumes, which have been pretty volatile. So yeah, the persistent macro risks from interest rates, overall consumer confidence in China, those are really the dominant factors here, maybe more so than specific company news.
So with all those challenges kind of swirling around, but also that recent UBS upgrade, what are analysts generally saying about BEKE right now? How are they balancing these conflicting signals?
Yeah, it's a balancing act for sure. As of, say, August 8th, analysts are indeed highlighting the stock's long-term value. They often point to the big drawdown it's had over the past 5 years.
Right, the it's cheap if things turn around argument.
Exactly. They see it as potentially undervalued if the sector recovers. But, and it's a big but, this value really hinges almost entirely on a turnaround in China's broader real estate policy and consumer confidence. It's less about immediate internal stuff BEKE is doing. That buy upgrade from UBS, though, it does signal some improved near-term confidence, maybe in the company's ability to navigate, or perhaps it's a bet that policy support might be coming. It's definitely a key point because it shows a major firm seeing some upside despite that gloomy macro picture.
Okay, let's shift gears a bit from the fundamentals. How is the market itself reacting? How has the stock been trading as we get closer to this report? Let's look at the price action.
Well, the stock's been trading relatively calmly, actually. In the period leading right up to earnings, BEKE has traded flat to maybe slightly negative. It closed at $17.57 on August 8th. We're not really seeing evidence of a strong run-up, which might suggest, big beat anticipation, nor are we seeing an aggressive sell-off signaling disaster fears. It's been kind of quiet, consolidation mostly.
Okay. For investors who are tracking the stock, what are the key price levels to keep an eye on, both for potential support, where buyers might step in, and resistance, where sellers might emerge?
Right. This is crucial for figuring out potential moves right after earnings hit. We're looking at pretty solid support around the $17 level. That's a recent low. And it's also, a psychological round number. People often see those as barriers. So more buying interest tends to cluster there.
Okay, $17 support. What about the upside?
For resistance, keep an eye on the $18.50 to $19 range. This area represents recent tops and places where the stock price got rejected before, so sellers have historically stepped in around those prices. A decisive move above or below these levels after earnings would be quite telling.
And what about implied volatility? What kind of price swings might the options market be sort of pricing in or predicting for BEKE after earnings?
Well, specific options market estimates for BEKE itself aren't explicitly laid out in our sources here, but we can look at historical post-earnings reactions for similar Chinese ADRs. American depository receipts for Chinese firms on U.S. exchanges. For those types of companies, the typical implied moves priced in by the options market have often ranged from plus or minus 7% to maybe 10% after earnings.
Okay, 7 to 10%.
Yeah. It gives you a ballpark idea of the potential volatility traders are bracing for. A 7% move on a, say, $17 stock is over $1 either way, so it's not insignificant.
Okay, given all these factors, the numbers, the context, the technicals, let's try to map out the possibilities. If you were sketching out the best case scenario for BEKE next week, what absolutely needs to happen? And then maybe more importantly, what's the immediate red flag that tells us things are going south?
Okay, for a bullish outcome, yeah, you definitely need outperformance on both revenue and EPS. Ideally, beating that $1.29 whisper number we talked about. But crucially, that would need to come with management guidance that points to stabilization or even better, an actual improvement in housing demand. That's key. Any signs of margin improvement, a return to positive transaction growth, which is absolutely vital for them, or even just positive commentary on regulatory policy or consumer sentiment. That would all fuel the bullish case. It's really about a combo, good numbers and a positive outlook from management, especially on the macro stuff.
Right. I'm particularly curious how much that management guidance could shift sentiment, given the sector's history. So on the flip side, what would trigger serious concerns for investors?
Well, a bearish scenario would be a clear miss on either revenue or EPS, or perhaps even more damaging, weak forward guidance. That would be especially worrying if management explicitly highlights, continued macro headwinds or ongoing margin compression, other red flags. Slowing platform user growth, or worse, actual declines in transaction volume. That would hit hard. Also, any evidence that competitive pressures are getting worse within the sector, it's not just about the reported numbers. It's really about the tone and substance of management's outlook for the next few quarters.
Okay, makes sense. Is there one single metric, though, that you'd say investors should be watching above all others? Like the one thing that really gauges B's health and future prospects?
Absolutely. Yes. The key metric to watch, and it's really the core driver for BEKE's revenue resilience and their long-term margin potential, is transaction volume growth. Given their business model, just how many properties are actually being bought and sold on their platforms, and is that number growing or shrinking? That tells you almost everything about the health of their underlying market. Investors will be laser focused on any changes here, believe me. It signals the fundamental demand for what they do.
Okay, bringing it all together then. What's our overall leaning heading into this BEKE report? Neutral, bullish, bearish, and what's the confidence level you'd attach to that stance?
Right. So our overall leaning is, I'd have to say, neutral. Despite that recent UBS upgrade and, a history of some modest beats, the sector just remains fraught with pretty significant macro uncertainty. It's hard to ignore. And as we discussed, those analyst estimates are quite tightly grouped, which really reduces the potential for a truly massive surprise, either up or down.
Right, less room for a shock.
Exactly. So our confidence score here is probably about a 5 out of 10. There's just limited visibility on whether we'll see a material beat or miss because of that tight consensus and the ongoing sector risk. The UBS upgrade is definitely a positive data point, but those underlying real estate challenges, they really limit any strong conviction. It makes it a pretty tricky call either way. This whole situation with BDIC, it kind of reminds me of other companies we've looked at where these huge macro forces just dominate the individual company story.
Okay, a neutral 5 out of 10. Given that stance and acknowledging those big sector risks, what are some maybe trading strategy considerations for our listeners, depending on how much risk they're comfortable with?
Yeah, that raises an important question for different types of investors, doesn't it? For, let's say, risk-averse investors, our sources suggest that maybe avoiding holding common shares through the earnings announcement might be prudent. Given the headwinds and BEKE's kind of lackluster history of post-earnings price moves, the potential downside from an unexpected negative might outweigh clear upside potential right now.
Makes sense. What about those willing to take on more risk?
Well, for risk-tolerant investors, maybe a short-term options play like a straddle or a strangle could be considered. These strategies basically bet on a large price move, up or down, after earnings. So that could potentially capture a volatility event if BEKE does surprise significantly. But a word of caution, implied volatility might already be high going into earnings, making those options more expensive to buy.
Right, the market might already be pricing in a move.
Precisely. And then for, say, medium-term investors, the advice seems to be wait for the report itself, digest the details, and only then think about adding exposure if transaction volume or that crucial forward guidance shows a positive turn. You'd want to see a signal of a genuine shift in their operating environment first.
So there you have it, our exploration of BEKE Holdings ahead of their upcoming earnings report. It seems pretty clear that while there are some positive signals, like that recent UBS upgrade, the broader landscape of China's real estate market definitely casts a long shadow. It makes this a really nuanced situation.
Indeed it does, and this really highlights how crucial it is to look beyond just the headline numbers, doesn't it? You have to really understand the macroeconomic forces at play. For BEKE, it feels less about, internal operational magic right now and much more about riding the tide of China's broader economic and policy direction.
So as you consider BEKE Holdings, maybe the bigger question to mull over is this: how will the Chinese real estate market continue to evolve over the coming months and years? And what will that evolution ultimately mean for the long-term prospects of companies like BEKE? It's certainly something worth tracking, as the answer really impacts not just this company, but potentially the wider global economy too. Thanks so much for joining us for this discussion. We really hope this has provided you with some valuable insights and helped you feel a bit more informed. Until next time.